What are these? We cover them on a daily basis. Now I'm going to try to keep this straight to the point and break it down in simple terms. What are short exempts? Realistically, this could be a 1, 2, 3, 4 hour video. I got this video request in Discord and I've been sleeping on it for a little while, but that is only because I've been busy. I'm going to quickly break down what short exempts are to you, and you should pay attention and watch through the end of the video because it affects stocks mostly like AMC, and we cover it on a daily basis. So without further ado, guys, hit the like button if you enjoy watching or find value out of the video. Subscribe to the channel. We are just brushing 19,000 subscribers, and I appreciate all the love and support that you guys show me. Okay, so we see short exempts day in and day out on AMC. This is actually the highest we see it on any given stock, excluding Mullen. Mullen is real bad. What are these? This is something that market makers take advantage of. This is a dangerous loophole. And before we have to understand what short exempts are, we need to understand what is regulation SHO. And I'm going to cover this really quick, really briefly. Regulation SHO is a set of rules from the SEC, the Securities Exchange Commission, that was implemented in 2005 to regulate short sale practices. Regulation SHO established, locate, and close out requirements aimed at curtailing naked short selling and other practices. Naked shorting takes place when investors sell shares that they do not possess and have not confirmed their ability to possess. In 2010, SHO was amended via changes to Rule 201, which stops short selling on a security when prices have decreased by 10% or more during the day, mandating that new bids be above the current price. Okay, what are short exempts? Short exempt refers to a short sale order that is exempt from the price test of the SEC's regulation SHO. So what is being said here is that regulation SHO was implemented, okay, to curtail naked short selling and other practices that are like that. Short exempts were created to be a short sale that is exempt from this entire ruling. So the SEC created an entire ruling and then created a loophole to go right around that entire ruling just to show the public that, hey, we fixed the system with regulation SHO, and then to sneakily say, no, we didn't, because this is curtailing to, or this is being a plus for market makers, hedge funds, institutions, not retail investors. Okay, the current implementation of this regulation contains a modified version of the uptick rule, which restricts the price of a short sale order on a security whose price is falling. Okay, what is the uptick rule? The uptick rule is a rule established by the SEC that requires short sales to be conducted at a higher price than the previous trade. So if we look at AMC, for example, you see these downtrends right here, the harsh downtrends where everyone's saying short ladder attack, they can't short on SSR. The uptick rule restricts short sellers, short positions from being opened on downticks. So they have to open short positions while the price is currently rising. The SEC's uptick rule requires short sales to be conducted at a higher price than the previous trade. A revised rule implemented in 2010 lets investors exit long positions before short selling is triggered. So when a stock drops 10% or more, basically the next day it's on the short sale restriction rule, aka the uptick rule, where, like we just said, shorts can't short it unless the price is rising. However, how is the price still falling? Retail isn't selling. They can't short on the upticks. Well, once again, that leads us into short exempts. This is probably the #1 way you see AMC's price action completely being controlled, the momentum, the algorithm completely being controlled, is because of short exempts, is because of the SEC being corrupt. Now, the current regulation allows for a comparatively small number of restrictions, and within those restrictions are an even smaller fraction of exemptions to that rule. These exemptions are intended to allow brokers to best serve their customers in panicked markets. Key takeaways real quick: federal law, security laws limit short sales in order to prevent them from contributing to downward volatility, which doesn't really matter when they have short exempts. These restrictions are applied by Rule 201, also known as Reg SHO, and more referred to as the uptick rule. Includes a circuit breaker that takes effect if a security falls by more than 10%. Certain traders are not restricted by the and may be labeled as short exempts, like we just said. These exemptions facilitate liquidity and arbitrage in the securities markets. Liquidity and arbitrage in the securities markets, what does this mean? This is the gap, the difference, okay? Bid ask, where market makers come in and they take pennies, right? This is pennies. But when it's constant and it's to the degree of millions and millions and millions of shares taking advantage of the arbitrage. And keep in mind, market makers are the ones who provide liquidity. This adds up. Okay, this adds up to a large amount. Now, here's something that's even more messed up. Standard market procedures require security sales to be labeled as long, short, or short exempts. Short exempt orders are allowed even in circumstances where short selling may otherwise be restricted. These are statistically very rare, and most retail traders would not experience the effects of these restrictions or their exemptions because of the modified uptick rule only kicks in under extreme circumstances, and the exemptions are largely targeted at institutional investors. Okay, exemptions largely targeted at institutional investors. That's number one. Number two, standard market procedures supposed to be labeled as long, short, or short exempt. However, in the past, some were labeling short exempts as long, which is completely wrong. So basically, if you come take a look at these numbers, where do all of these numbers come from? How do they add up, right? Are they just regular shorts? Not necessarily. If you look right here, the short exempt making was added under 2010 modifications. Thus, in order to buy is marked long, short sale that complies with the uptick rule is marked short. A short sale order that is marked as short exempt is an order that is being transacted under one of the exemptions set out in regulation SHO. So a short sale order under any exemptions in Reg SHO adds another number to this number. Okay, so that's something to note right there. Okay, when a trade can be marked short exempt, this is important as well. The seller owns the shares being shorted but is restricted from delivering them at the time the short sale order is placed. The short sale order is being made by a market maker in order to resolve an odd lot position. What is an odd lot position? An odd lot is an order amount for a security that is less than the normal unit of trading for the particular asset. Odd lots are considered to be anything less than the standard 100 shares for stock. Trading commissions for odd lots are generally higher, yada yada yada. Okay, what fan base are purchasing these meme stocks? Retail. How many shares do retail usually buy? It's usually in blocks of less than 100 or the 100th. Okay, these aren't whales here. So a short sale order is being made by market makers in order to resolve an odd lot position. So that's going to happen constantly, or at least can happen constantly. Okay, the short seller is attempting to arbitrage between price differences within the domestic or international market with certain conditions. The short sale is made in connection to a layoff sale or over allotment, or lastly, it executed on a volume weighted average price basis with certain conditions. So basically, a ton of things can be marked as short exempts. The video can be extremely long if you go into how do they have the inventory to continue to do this, and that's going to bring you down a brand new route, which is going to bring in the option chain, calls, puts, what market makers do, how market makers are corrupt, and how they use the system in a way that it was created to be used. The SEC created a terrible system, a corrupt system, a manipulated system, and they're taking advantage of it. But this is basically a quick breakdown on what short exempts are. They continue to drop them, and then they continue to rinse and flush the clock and pretend they delivered them, so on and so forth. This is just a short breakdown of what short exempts are. Hopefully this helped if you didn't understand them at all. And this is just a quick video on it. Guys, it's the weekend. Before we start the week and make some money, get in the Discord. The link is right under the video. Come talk with me. Come talk with the most amazing people, stocks all day long. I post my personal trades as soon as I take them, and we're going to make some more money this week. And also, if you want 10 free fractional shares of a magnificent 7, use my link, open a Moomoo account, and make it a positive even $1 to start earning benefits from there. Both of those links are at the top of the description and pinned in the top of comments. Enjoy the rest of your weekend. Have post notifications on. Love you all. Lottery Stocks out.